Alright, welcome back everyone. So today I'm going to be showing you my growth portfolio within the Trading 212 platform, and we'll be taking a look at just how badly hit some of the investment choices that I've made as we see a downturn of some of these growth companies. Now first up, let's determine how many number of likes we're aiming for in this week's video. So the goal that I'm setting is set to 63 thumbs up. And so hit that thumbs up right now and share the content with any friends that you may think will find this content interesting. And with that said, let's jump back into the video. And so my growth portfolio, looking at a bird's eye view, we can see that I'm currently down 27%. What I want to go over today is the specific companies that have been badly hit and whether or not they're still a good investment. And so just working down the list, one of the first companies that have been struggling is that of Alibaba, currently down 48%. And if we look into the performance, we can see that in the last year, it's just been dropping downwards all the time. The current price of $108 has been a figure that it hasn't really pushed further down, so it's somewhat of a resistance. It's a question of whether we've found the bottom now and whether or not this stock can bounce back up, but it's hard to say at the moment. Personally, I just have 1.3 shares, so I can easily invest and reduce the 48% decrease quite quickly. But I would have to deep dive into the company to understand a little bit more as to whether there can be a bounce back potential. Now, AT&T is an interesting company because since late 2021, there's actually been an increase in the price, but again, there was a sell-off from mid-January. Now, AT&T has a range of issues that they're facing at the moment, but when I look at these companies that are in the red, it's very tempting to put money in thinking that they're going to bounce back, but we do have to do our research each time. So in future videos, I will take more of a deep dive, but the goal of this video is just to highlight some of the worst performing companies within my portfolio. And so next up, we've got Beyond Meat, down 51% at the moment. There's been a large sell-off, and that's been happening since all the way back in May 2021. Let's quickly look at some of the stats here. So we can see that from October 2021, we had a net loss increasing from 27 million all the way to 101 million. It looks as though they've been expanding their international markets, and there's been a slight increase in the US by 1%. Here they state that a higher net loss is due to selling, general and administrative, missing the E there, increase of 49%, which is up 127 million. And then also research and development increasing from 17 to 41 million. So actually that is a large expense, 128 million. If they were able to reduce some of those costs there, then we probably wouldn't have seen such a high net loss figure of 101 million. And then we have Block, which is formerly known as Square. They've actually been positive in 2020. If we look at their quarterly earnings, there's been an increase from Q1 of 21 to Q2 of 22. Interestingly, their revenue is at 3.84 billion with a net income of 84,000. So they're obviously reinvesting a lot of their money back into the company. Quite a high debt to asset ratio of 72%. But out of all the companies that I've mentioned, Block is looking probably the strongest, given that they have an actual net income which is positive. Up next, we have the UK-based company Deliveroo, down 44%. Let's take a look at some of the quarterly results. They've been negative in Q2 of 21. This company is always operating at a loss. But in saying that, the CEO is really interested in character. If anyone is able to turn a profit sometime in the future, then Will is definitely the person for the challenge. But we can see it's just been a massive sell-off all the way down at £1.24. And so Entourage Health down 78%. I've actually averaged and added more money into other portfolios just because Trading 212 doesn't allow me to add any more. For any new investors out there, you won't be able to invest quite as much as I have. I do think it's just a waiting game until this stock rebounds, and then it'll be very exciting times. So I definitely recommend you look into this company. High risk, high reward. So far it hasn't paid off, but I'm still very bullish on the company as a whole. And then not too bad, but Netflix is down 22%. Actually, this is one of the great companies out there, given that they are a subscription-based company. We can see that their net income is 5.1 billion. I mean, these are really incredible numbers right here. You can see the revenue to net income, really nice graph. This is what you want to see in a company. Now, relative to the other companies, Netflix is one of the stronger ones out there. We can see this account only has £40, so down 22% actually isn't a big deal. If we look at the price, we can see it's down, but stable at $390 at the moment. So for Netflix, had you invested back in, say, November, you would have been buying into the peak. At that point, you're probably looking at close to 50% decrease. But if you ask me, this is a great time to buy in. I'm pretty confident that this company is going to be bouncing back, and just in terms of the figures, as we've looked, they are really solid. So Netflix doesn't actually deserve to be undersold at a price point of $390. And then we've got NEO. I have a small holding here, £126, down 47%. This has always been a risky company. And to be honest, I don't really look into some of the stats, but we can see that they're operating with a net income of minus 5.6 billion. Not looking good for the company. Personally, I'm more bullish on the likes of Lucid Motors, and that's still been performing really well, so I focus less on NEO, but just holding some shares just for the fun of it. And so some other companies on holding, down 24%, Open Door Tech, minus 27%. PayPal is another interesting one, minus 56%. You can see the sell-off that's just been taking place. Again, similar to Netflix, is it justified that the price is so low? Definitely not. We can see a net income of 4.17 billion, so another strong company and another great place to actually start buying into. Just ride it out until the prices bounce back. Now, who would have thought I actually own some of Robinhood shares? I had an entry point in mind, which I think was around $15 or so. Yeah, we can see my average is around $15. I probably should have waited a little bit more, but we can see the price at the moment is at $11, down 25%. Personally, I think there's less room if you want to quickly buy and sell into Robinhood. And even as a long-term holder, it's hard to see how worthy these shares are. But can this reach back to $15 or maybe $20? It may take a while till we see $70 mark again. And then Shopify, I posted a separate video on the company, how it's been performing. There seems to be a bit of a debate in the investment community. It goes without saying that I'm very bullish on Shopify. If we just take a look at some of the stats, net income, 2.9 billion, their revenue of 4.61 billion. This is probably one of the best companies that we've seen in terms of being a money-making company. It's very rare in the tech scene to see such a high net income, which almost matches the revenue. It shows how efficient this company is. And then the final one, we can see Tattooed Chef down 31%. They've actually turned a profit back in 2020. If we look at their quarterly earnings, they've been doing well in 2021 as well. Debt to assets is very low as well. So does a 31% in my portfolio justify? I really don't think so. This is another company that can bounce back. But in terms of the companies that I personally would invest heavily in is first and foremost Shopify. I see how strong this company is. I feel confident to say that we're going to hit over the $1,000 mark once we see growth stocks pushing up again. I've been using the Lightyear investment app to buy more into Shopify, just because in terms of buying into US companies is much cheaper. I'll have a link in the description below if anyone's interested for the Lightyear app. You'll receive $10 once you sign up and fund your account. It's a really nice app that I've been enjoying, and my growth portfolio, I'll be adding more to Lightyear compared to the portion that I allocate within Trading 212. And so, as I say, Shopify, a great company to invest in. PayPal as well, we can see that push up in the future. And then finally, Netflix, that is oversold at the moment and undervalued. So those are three companies that I would personally invest more into. So far, my focus has been within Shopify. But let me know in the comments below how some of your growth stocks have been performing in terms of the most hit. And equally, in terms of any companies that have been performing very well, do shout that out in the comments below. If you want to see more videos like this, where I take a look at how my portfolio has been performing, then also let me know in the comments below, and I'll create more videos like this in the future. For anyone that's new to the channel, definitely hit that subscribe button. And if you're feeling adventurous, then hit that notification bell as well. I post every week on a Friday, so if that's something that interests you, then it'd be great to have you on board to join the existing community. So thanks again everyone, and with that said, I'll catch you in the next one.
It's a lot we don't talk about, I don't really know where to start. I got feelings inside me, can share my stories, we fell apart. I had wrote you a letter, but then I burned it up. Your satisfaction is key, but the satisfaction in me won't let you be me. And I know I'm selfish, plus we got one on the